If you are holding altcoins right now, this video is your wake-up call. Many alts aren't just down, they are finished. Some will never recover, no matter how long you wait or how strong the next pump is. Today, I'll walk you through 5 brutal but essential stress tests that will expose whether your altcoin is still a viable play or just digital dead weight. These are objective, reality-based checkpoints, not influencer hype. If your coin fails even a few, it's not an investment, it's a liability. You need to cut it before it sinks your entire portfolio. Stick around till the end, where I'll also share a practical framework on how to strategically exit these positions. If that sounds good, support the channel by hitting like, and if you're new here, subscribe. I post content that cuts through the noise and helps you navigate the crypto maze with clarity. Let's get into it. There is a hard truth no one wants to say out loud. Most influencers serve you comfort content because that's what racks up views. They talk about alt season like it's scheduled every Tuesday, and by Friday you're staring at another weekend dump. I'm not here for that. I'm here to give you the unfiltered reality. Most altcoins we hold are just future bags of unopened regret. But the crypto space thrives on hopium. Influencers still shill ghost projects, and founders keep up appearances, pretending the community is alive and strong. That illusion fuels your belief in the next face-melting pump. Bitcoin has crushed all-time highs, and even ETH is showing strength. Yet some altcoins are still down 80% or more. So the real question is, how do you separate the runners from the ones already finished? The first and most important one is the Bitcoin benchmark test. Let's start with the simplest question. Has your altcoin outperformed Bitcoin since the last bear market? Is that shiny new coin from this cycle holding up well against it? Because if it hasn't, you're already losing. Altcoins exist to outperform Bitcoin. That is the whole point. Otherwise, why take the extra risk? And yet, the vast majority of them bleed against it. It's not just USD drawdowns, it's real decay against the strongest asset in the space. Most holders are emotionally tied to their bags, while smart money only tracks performance. Look at Solana. It has held strength against Bitcoin since the 2022 bear market bottom. Despite chopping sideways all through 2024, it is still up over 200% in sats. And while an alt season hasn't truly kicked in yet, your altcoin should at least show signs of strength, if not outright outperformance. Take BNB. No massive breakout, but it has held its ground well since the 2023 bottom. Now contrast that with something like Polkadot, which has been in a steady decline since 2021, Avalanche, which is down over 90%. Let's look at some coins from this cycle. Sui hasn't outperformed Bitcoin, but it has held up decently without making new lows. Now compare that with Starknet, down 97%, Pyth down 93%, Arbitrum also down 93%. You can take short-term trades in these if you see upcoming hype, but don't treat them as long-term cycle holds, especially when this cycle could drag on longer than expected. Always protect yourself with a stop loss. So the first check is simple. You want your altcoins to show strength against Bitcoin. If you are holding coins from the last cycle and they're down more than 70% in sats, chances are they won't recover or outperform. Because old coins come with old bag holders, you're better off rotating into something showing real strength and fresh momentum. Coins like Polkadot or Avalanche carry too much baggage, and more importantly, their narratives have faded. Which brings us to the next critical test. Narrative relevance. Crypto runs on stories. Every new cycle brings new narratives, and those narratives drive capital. If your altcoin isn't part of any current or emerging theme, it's already irrelevant. Back in 2021, it was all about the metaverse, play to earn, and NFTs, but most of those narratives have vanished, and so have the tokens that were riding them. Nobody's rushing into Sandbox or Axie Infinity anymore. If nobody is talking about your coin, there's no one left to buy your bags. Polkadot once had buzz with its parachain auctions, but that narrative failed to stick. Avalanche gained traction during ETH's high fee period. People were searching for the next ETH. But with Solana offering near-instant settlement and dirt-cheap fees, that search is over. You need to ask yourself, is the project I'm holding still part of the conversation? If the narrative is fading, the mindshare fades too. Activity dies off and the coin becomes a ghost town. That takes us to the next checkpoint. Developer activity and ecosystem growth. Always remember, price is a lagging indicator. What truly reveals the strength of a project is the builder activity. If there are no commits, no protocol upgrades, and no new integrations, that's not just a red flag. It usually means the project is already dying. Check GitHub activity, developer contributions, and ecosystem expansion. A growing builder base is a strong sign of long-term potential, even if the price hasn't reacted yet. On the other hand, ongoing silence from the dev team is a major warning. If you've been in the Discord servers of both strong and weak projects, the contrast is clear. You can often tell which teams are actively building and which ones are just going through the motions. Another important checkpoint is liquidity and volume trends. This is where the real rot starts to show. One metric to check is the volume to market cap ratio. Ideally, this should be 4% or higher. You can find this on CoinMarketCap for any token. You can look at ETH or Solana. They consistently hit above that threshold, which shows strong demand and active trading. Now compare that to something like ICP. It has a ratio of around 2%, which is not healthy, and while some fans might get triggered, this is just data. Don't shoot the messenger. Even newer coins like Sui or Ondo are showing strong volume ratios. But then you have coins like Caspa with weak volume, not enough interest to justify the market cap. But remember, low volume doesn't always mean death. You need to dig deep. For example, Bitcoin's volume to market cap ratio is under 3%, but that's because so much of the supply is held long-term and off exchanges. Same for Cardano. About 70% of supply is staked, which limits active trading, so context matters. You can also compare current daily volume with previous bull run's volume, or compare two coins in the same category. Take Sei and Algorand for example. Both are layer 1s with similar caps. Sei has healthy activity while Algorand is fading. If your coin's volume is down 80 to 90% from the highs, it's not just the bear market, that's abandonment. Big players avoid illiquid assets, and when liquidity dries up, price becomes irrelevant. So when the real pump starts, you're stuck watching everything else moon while your coin barely moves. The fifth and final test is price structure on the chart. Let's talk price action. If your altcoin is still 80% below its all-time high with no structure, no higher highs, and no signs of a breakout, that's not bullish. Many alts form long sideways ranges only to break down again, false hope with no real trend, and yet people still call it accumulation. But real accumulation shows volume spikes, higher lows, and breakout potential. If the chart is just flat and lifeless, it's over. There's always a reason behind this kind of price action. Take Optimism for example. It's not a bad project. Along with Arbitrum, it's one of the best layer 2s out there. But the category is overcrowded and no project has managed to stand out as a leader, which is reflected in the charts. If your coin is still down over 80% while Bitcoin is hitting new highs and other alts have bounced, there's likely something wrong. Waiting for it to recover is usually a losing strategy. The opportunity cost is real. That brings us to the key question: how do you actually exit when you realize your portfolio holds one of these coins? I've been there myself, and I've openly said that I still hold a couple of such bags. So here are 3 common situations I've come across after talking with members of the CryptoDecoder community. By the way, this entire video idea came from a comment in our Discord. Huge shout out to everyone contributing. I highly recommend joining us there and following on X. You'll get valuable insights on a daily basis. Links in the description. Alright, let's break down the 3 situations. First, your altcoin is trash and you know it. You just can't bring yourself to sell because it's already down more than 80%. In this case, you need to understand the concept of opportunity cost. You have a better chance of recovering your capital by rotating into stronger plays. You can handle this 2 ways. If you're fully deployed and don't have any stablecoin stacked to buy dips, sell that trash and move into stables. Then wait for a flash crash. They will come, trust me. Have your limit orders ready at various levels. If you already have a stablecoin reserve, sell your position into Bitcoin or a higher quality altcoin. Even if Bitcoin rips from here, it will likely outperform the junk you're stuck in. Second, you're moderately down but not in panic mode. You're willing to wait for a bounce. That's fine, just make sure you use that bounce to exit. Rotate into Bitcoin or sit in stables depending on your strategy. But don't make the mistake of chasing the next pump. Wait for dips and enter with a plan. Third, you're down on a coin but you still have conviction in it. If you've done your research and truly believe in the fundamentals, you can hold. But remember, if your coin fails all 5 of the tests we discussed today, then it's not conviction, it's denial. You're probably holding a future bag of regret. Always keep in mind, we're here to make money, not to be honorary members of some dead community. Hope this video gave you the clarity you needed. Thank you for watching, and I'll see you in the next one.